Welcome to Revere Asset Management's Your Money with Danny Stewart
The market will always overshoot to the downside and to the upside.
and Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
And today, for something totally different, Monty. Folks, welcome to Your Money Radio. Today, I decided to do something different. We're going to do a Q&A day. We're going to have a couple questions that I came across this week that I thought were, well, quite frankly, absurd. And so we're going to see if we can answer them. So the first question is, how do you know inflation is going to subside? How do you know it's actually going to come down, not skyrocket? The answer is when all the economists see a surge, like now. So, you know, the ones that warned us that inflation was coming a couple years ago, give me one name, just one name, one economist that is warning about massive inflation coming. Give me one name that also warned about the inflation of 2022, because none of them did. Not one economist that said we're going to have inflation coming up warned about inflation in 2022. So why would you listen? Just a question. Second question. Is Manhattan really Edward Jones' target market? Really? Edward Jones has announced they're going to expand in Manhattan because they think Manhattan is underserved by their pie charts or us portfolio. Sorry, I had to let that out. You know, I don't know. I mean, their target. I mean, I don't know. With Edward Jones, I don't think of Manhattan. When I think of Manhattan, I think those wealthy Manhattanites think of Goldman Sachs or Morgan Stanley or Merrill Lynch. I just don't think they're going to be going to a Ray J or an Edward Jones. Call me crazy. I mean, it's almost as bad as the CFP board wanting stoner couch potatoes for their advisors. I mean, I just think you're missing the mark there. But the winner, trying to get that drum roll, it didn't work very well, is how much would you pay for a banana duct tape to a poster board? Would you pay $5? Would you pay $10? Would you pay nothing? Or maybe $1 because you're hungry? Or, I don't know, $150 to $200 because you're at a starving modern art show at the local Holiday Inn and you're helping a relative? Or maybe even 20 grand or 50 grand because, or even $1 million because it's Andy Warhol or Jason Pollock or some funky thing. Well, no. Don, can you bring that picture up, please? Can you show that, Zach? A picture, a banana. So they went down to the local Walmart, bought a banana, went down to Home Depot, got some duct tape, went to Michael's, got a poster board, and they taped the poster board, the banana to the poster board with duct tape. And it didn't even sell for $1 million. No. It sold for $6.2 million. A banana on a poster with duct tape. I have one minor trivial question, just a little deal. It appears that banana is real. You know, this aestheticism art is a big thing now. I got a question. What happens when that banana rots? Seriously, it actually probably is some kind of, acrylic or something. But also, who's going to insure that? Can you imagine calling your insurance company and say, "Hey, I'd like to insure. Yeah, I got to insure this banana for $6 million." How does that underwriting go? How does that conversation go? Yeah, sure, I'll hold. I just don't know. Folks, I'm sorry. That is foolish. Now, those are the people, someone that's willing to pay $6.2 million for a banana, we need to redistribute their wealth. Those are the people that need to pay estate tax. Those are the people that should not be spending money, or at least other people's money. They can spend their money. In any event, this whole thing is crazy. I think Shakespeare would be rolling over in his grave if he would see all this stuff. But the real question everybody's asking, forget all these distractions, is to sell or not to sell. The market's at all-time highs. I'm scared to death, but it looks like it wants to keep going higher. What the hell am I going to do? That's pretty much the question that everybody's asking. So we're going to boil that down, and for that, we got to go to Don and the team. But very quickly, I want to go to the mailbag. We got a few things in the mailbag, and they were pretty good. And one is on 11/18 from MB, and it's an article. It's about the Shiller case, the Shiller PE. It's called the CAPE ratio. Basically, it's the PE ratio, but they use a 10-year average to smooth it out. And he said, another tea leaf, I leave it, the Shiller PE ratio is another tea leaf. I leave it to Revere to sort through the chart the course of the stormy seas. I put that article on there. It's an interesting read. My answer to him was it's an interesting indicator, although it's often too slow to help. But it does help you with valuations, whether the market's expensive or not. Got another one on 11/20 from ND. Hey, she sent this through Twitter. Hey, Dan, I watched the presentation where you were speaking about I watched a presentation where they were speaking on a company that recently went public and is trying to do what Texas Pacific Land did in a new model. Landbridge, ticker LB. Will you look at the fundamentals and see if it's something that the portfolio might look at in the future? By the way, she's a client, full disclosure. Found a couple of articles with hard assets being the thing, the rise to the data centers and Texas growth model. I would pass along. It's up 275% year to date. Thanks again, and pass along to the whole gang. And an extra shout out to Ted and the crypto technicals on the podcast last time. They were helpful. Folks, Texas Land Capital is, or Texas Pacific Capital, they're a company that actually did a bunch of those towers for the cell phones and stuff, and then they just lease them. And so it's like a big bond on the cell towers. Well, what this new company is going to do is going to try to monetize hard assets. And so you're going to be an owner of hard assets, and you're going to lease the hard assets. I'm kind of oversimplifying, but the article's in there if you want to read it. There's an article for K. Shiller. And, there's an even article about Edward Jones wanting to go into Manhattan, if that should interest you. I don't know why it would if you're watching this show, but if it does, it's there for you. With that, I want to go to the team. But before I forget, next week, folks, I want to wish everybody a wonderful and happy Thanksgiving. I hope you spend it with your family and you're not working, but I'm going to let now we'll be working. We'll be watching the portfolios, except for Turkey Day. The markets are closed, but we will still be working. But I'm going to give the team a break for not have to prepare for the show. So we are going to skip a week for this podcast, but we'll still be doing the daily market insight videos every day the market is open. So without further ado, let's go to Don. And Don, the big question is, should I sell and should I go or should I stay?
Well, the good thing, Dan, is that anybody that watches our nightly videos has that answer right at their fingertips, because we discuss every night what our portfolio changes are, our current view on the market, the different indicators that we watch. And right now, we're in a bull market, plain and simple. The trend gauge flashing the coveted 4 green arrows, which means I'm showing the S&P 500. It's trending above all 3 of the time frames that we track. That is the short-term 21-day moving average. That's the green line. The medium-term 50-day moving average. That's the red line. And the long-term 200-day moving average. That's the black line. Bear markets never occur unless you break below this black line. Breaking below the black line doesn't mean a bear market is guaranteed. That's normally about a 10 to 12% drawdown off of the top by the time you break that. But with the major indexes all trending above those levels and leading stocks acting extremely well, we are as long as we've been in a significant period of time. And of course, we always have stops in place, so we know what would happen if all of our stops would get hit on the same day. That's about a 7.5% drawdown, and we continue to just ride the wave. We had a couple of tests of the short-term moving average last week and early this week. We talked about let me go to a 60-minute chart here. The range that we were concentrating on, 58.50 on the downside, 59.50 on the upside. We tested 58.50 several times, and it held. And yesterday and today we got back above. Actually, yesterday we poked our head above 59.50, closed just a point below it. But we're back above 59.50 today. That's the level that you need to get above before we take a shot at all-time highs. The resistance level there is 6,000 to 6,017. Resistance just means you got to that level, couldn't quite hold it, couldn't go above it. We battled around that for about 4 or 5 days 2 weeks ago before this latest pullback. And just technical analysis 101, what was resistance back in October, this 58.50 to 58.62 level turned into support when we pulled back late last week and earlier this week, and it held like a champ. And until what our support levels, until they start to give way, you give the market the benefit of the doubt. And then, of course, we look to leading stocks, and they're acting extremely well. One of the best environments for leaders that we've seen since last November, December.
Yep. Hey, I want to add one point. So Don said, so whenever we buy something, we know exactly where we would sell it, where the exit would be, where the quote stop would be. Now, Don said we always have stops in place. Technically, we're not actually using hard stop losses. So that's philosophical when we say stops, because that's the word they use. But the market makers know where the stops are, and they rape retail investors all the time. They manipulate it down just to gather all the stops, and then the stock takes off and goes right back up. So we actually have alert sets. So when it hits the price where the stop would be, Don gets an alert, and then he can make the appropriate action, whether it's a VWAP, a limit, market order, a call for an upstairs bid, whatever it is. And so I just wanted to clarify that, so that because we're not actually using hard stops, but we have stop levels in place. Go ahead, Don.
Yeah, pretty simple, Dan. This week, anyway. Last week we talked on the podcast. We were testing a key level, see if it would hold. It did hold, and we bounced off of that and made higher highs. So again, that's the market telling you that there's underlying strength and underlying bid. Anytime bears try to take over, they've been failing since the gap up after the election. So the next target to the upside is that 6,000 to 6,017 resistance level that the S&P was not able to get past. I do want to point out that the leading index this week has been small caps. We took a dip into small caps yesterday. I talked about that in last night's video. But small caps up over 4% for the week. Let's see exactly where we are as of noon on Friday. Yep, 4.04% on the week, while the S&P 500 is up 1.5% on the week, and the NASDAQ 100 is up 1.6% on the week. So small caps taking a roll. That may be a sign that maybe this pop up that we've had in interest rates, another thing that we discuss in every one of our videos. We've been consolidating for about 3 weeks here in this tight interest rate area, unable to pop them higher with the Fed. These are long-term rates. The Fed can only control the short-term rates. Obviously, they cut last meeting, and we'll see if we start to come down to the lower end of this range on long-term rates. That would be bullish for the market. Of course, breaking out above there would be bearish for, and really it impacts companies that have substantial debt. If you don't owe a bunch of loans, especially variable loans, it's not that big a deal. And that's why you see stocks with pristine balance sheets outperform as interest rates are rising. So that's current take on the market. Any questions on that, Dan? And no. I do want to talk about LB. That was in the mailbag. Great chart, great concept, too thin for us to own. We need at least 100 million in daily dollar volume. Right now, the average on this is 400,000, and it's a $74 stock. So that's far below the minimum threshold that we would need to get involved for clients.
Yeah, it's nice.
No questions. Yeah, let's take it over to Connor. Connor's going to talk about, an interesting topic. did we see? I touched on it a bit in last night's video, but Climax tops is what Connor's going to talk about. So take it away, Connor.
Yep. Yeah. So everyone probably has heard of MicroStrategies by now, and so I kind of wanted to talk about this and some of the things that you see in a Climax top, because we've seen this earlier this year in a different stock that I'll cover after MSTR. And basically, being able to identify these reasons, these triggers, can also help in the profit taking. So basically, this pretty much checked all the characteristics of a Climax top. And basically, the list is, first one was, this was 8 ATR extended from the 50-day moving average. And historically, you can look at thousands of charts. That's just extremely rare. It doesn't happen very often. And usually the rubber band pops eventually when something hits that much extensions. And then the second thing was, yesterday it was 200% above the 200-day moving average. Again, historically very extended. It was also 130% above the 50-day moving average. And as you can see, the past 3 days, the range was expanding. So the up days were starting to get more violent, bigger percent increases, and the volume kept increasing. And then on that third day, it was the highest volume of the whole entire run, and plus a third day gapping higher. So that's another thing. When you see 3 large gaps on huge volume, when a stock is already very extended from the base, that's can be a very big tell. And then you see that fourth day, it was gapping up over 540, and basically any shorts left were taking their last breath of air, and you could just see in the tape they just really got squeezed out, the last bit of it. And then it obviously reversed. And then some other things was 3 days outside the daily upper Bollinger Band. Put a Bollinger Band on any daily chart. Stocks can't really sustain outside that upper band for too much, for that long. And it's just pretty much, classic mean reversion. And so yesterday we saw that gap pre-market. It was big. And then once it broke those pre-market lows, it was a huge fade. This was a 32% reversal from high to low, which is pretty big. But then again, just to put perspective how extended the stock was, it just touched the 8 EMA. And so, and that Climax, and that yesterday was highest volume in this run. So, this isn't a top call by any means. This could very much go higher. And that will bring me into the next example, which is SMCI.
Hang on, Connor. I just want to put an exclamation point on the comment you just made to make sure that people caught that. So what he's saying is, yesterday that stock sold off, just más o menos, roughly 30%. And it's still, even selling off 30%, it just came down to his 8 exponential moving average. That's its short-term momentum moving average. So that's just coming into the short-term trend. That's how high above the short-term it was. Go ahead, Connor. I just want to make sure everybody caught that, the magnitude of that.
Right. And with these Climax tops, you don't know what people's cost basis is. So it's usually a good time to sell some in the strength. If you haven't, then again, if you have a lower cost basis, let the dust, you can always let the dust settle and trail with, 8, 21, however you trail positions. And so I thought this quote was great for my segment. And this is SMCI earlier this year, and history doesn't repeat itself, but it often rhymes. And that's exactly what I thought when I was looking at MSTR. So this is SMCI from February 16th earlier this year. And we were trading SMCI back then. So I had notes of exactly this setup in my journal, and the similarities were there were so many of them. So basically for this Climax top on SMCI, it had 3 gaps in a row as well. You can see that range was expanding. The volume was increasing. It was 237% above the 200-day moving average, very similar to MSTR, 135% above the 50-day moving average, which was 5% off SMCI or MSTR, sorry. And then in less than 5 weeks, this made a 200% advance. So obviously the rate of ascent of the move was increasing rapidly. This had 4 days outside of the daily upper Bollinger Band, and it was 9 average true range extended from the 50-day moving average. And as you can see, this was pretty much the same exact thing. This was the day 4 gapping higher, and I remember that pre-market. It was the same thing that MSTR did. It had that really strong pre-market push, and then right when the market opened, it kind of started fading off aggressively, broke pre-market lows, and it was an all-day fader, high to low. That was, again, like 30 to 40% move. And so they were just super similar. And two other things that I think are funny that, I like to follow social sentiment and that type of stuff. And 2 to 3 days before the SMCI parabolic top, I remember there was a tweet on Twitter, and at the Supermicrocomputer headquarters, they were throwing like a party for just the stock price increase. And believe it or not, 2 days later, it had this Climax top action. And then for MSTR recently, yesterday, Michael Saylor tweeted a rocket ship, and then he's just been joining podcasts, and he's kind of started to become a celebrity. So sometimes when you see the CEO of a company starting to be a celebrity, could signal that the stock is getting a little bit euphoric. But Don, if you just extend SMCI like 2-3 months later, so this one did pull back to the AEMA as well. And as you can see, this actually wasn't the top. It pulled back to the 21-day and shot right back up. And it actually, moved another, 50 to 80% after that Climax top candle. And then obviously eventually topped out up there. And, now the company's in big trouble. But so the Climax top, this isn't, a top call at all, but it sometimes can be a little bit of a warning sign when you see biggest daily range on highest volume ever. So just maybe gives you a little bit more caution. But MSTR will be super interesting to watch in the coming months because, again, like SMCI, it's finding support at rising moving averages. So this could also be a precedent for MSTR moving forward. And that's my section on Climax tops. And one thing I want to note too is keeping a journal of setups and just tracking down the stats, what something did, can help a lot because, it is just crazy how similar these two things were in the same year.
Those stats are fantastic and really eerie how close they were to each other.
Yeah.
And it really did give a good insight into the potential action that could happen. And now, just like we saw with SMCI, when everybody says something is happening, maybe it's not. Everybody thought for sure that the nail was in the coffin of SMCI, and that was absolutely a Climax top. But fast forward 2 weeks, just as Connor said, it pulled back and then it ran 60 to 80% higher before finally giving it up. So time will tell whether or not this makes a higher high. It's obviously it's tied to Bitcoin. Bitcoin coming up on a major milestone, 100,000. Wouldn't be surprised to see that be a sell the news event, at least in the short term. But the thing about MSTR is that next week, Michael Saylor is presenting to the board of Microsoft on how he has managed the money on their balance sheet and how they've invested it in Bitcoin and done these offerings to buy more Bitcoin. So we already know there's at least one other company out there doing it, SMLR. I mentioned that in last night's video. Will Microsoft and these other companies that have massive balance sheet balances in cash or treasuries decide to take a little dip into the Bitcoin waters? The thing is with Bitcoin is it's got a finite supply. It can never be more than 22 million, and not the case with the printing press of the United States, obviously. So We'll see how it plays out.
Here's a question, Don. If people really start to becoming so bullish on Bitcoin and everybody wants Bitcoin, does that crowd out the treasuries? In other words, will some demand go away from treasuries, thus driving up interest rates, and go to Bitcoin instead? Because remember, there's a finite amount of investor money that investors have to invest, and they got to choose what's the best place for my money: stocks, bonds, Bitcoin, whatever. Anyway, just an interesting observation.
Yeah, the good thing is that the charts will tell us.
Well, that's exactly right.
Guess.
Oh, you hit it. I
don't have to guess.
Softball pitch there for you, Don. You hit it. Good job.
We'll go by what the charts tell us.
Price is truth.
All right. Thanks, Connor. Appreciate that. Great segment. Ted, crypto theme 2 today to kick off some great insight here. Why don't you take it away?
Yep. Thanks, Don. So I recently talked to a client who's interested in buying some Bitcoin, and you know who you are, so shout out to you. And he pretty much just wanted a rundown, and I'm assuming that many of you might also be interested in accessing Bitcoin or other cryptos. So I presented a few slides regarding the process and logistics of buying and owning crypto. And in the US, the 3 US regulated exchanges right now are Coinbase, which is the biggest one, Gemini, which is also pretty big as well, and then Kraken. And so these are pretty simple. They're centralized exchanges, just like a brokerage, like a Schwab. You create an account, put in your various social security and other information, and then you're signed in, and you could just easily transact from fiat to crypto through an ACH, or you can wire in as well. And in terms of storing your crypto, of course, we all know storing your crypto on an exchange can be risky. There is counterparty risk, especially if one of these exchanges blows up, like we've seen in FTX and previous ones before. And so on the next slide, Don, I just want to go into the first layer of protection, which are software wallets. And these are essentially just apps, either on your desktop or on your phone. And 2 of the biggest ones are Phantom, and that primarily stores Solana, which I'll talk about the chart next. And then Rabi Wallet is probably the biggest one to store pretty much all other cryptos. And finally, if you are buying and holding and you don't see yourself selling at all, for example, Bitcoin, on the third slide, these are the 2 major cold storage companies. Ledger is one, and then Trezor is the other. And Ledger is definitely the gold standard. They're the most popular company. And even though there is fear on the internet that there are hackers that do hack into these are still definitely the best bet in securing your crypto. Nothing is foolproof ever in terms of security. And so continuing on, I just want to talk about,
before you go on, Ted, can you explain exactly how these work? So you buy crypto. Obviously, it's on the blockchain. It's at risk of either you lose the password and then you can't get to it, or this cold storage. So explain exactly how that works.
So this cold storage is, to explain it simply, it's kind of just like a USB drive, and it's connected, and you have your address, and essentially you just send your crypto. Let's just say Bitcoin for this example. You just send your Bitcoin in to your address, and it's stored in this cold hardware wallet. So what you have to be careful of is you can't really lose it, or else it's just gone. So you better have it secured in a safe that's fireproof, especially if you are offloading a lot of money.
It's like a bar of gold.
Exactly. It's like gold.
If you lose a bar of gold, you can't get it back. So that actually is a USB. It's like a USB drive. That's like a flash drive.
Exactly.
It's got your stuff on there, and you better keep a good flash. So there's a guy out in L.A. that he bought Bitcoin early. I think it was L.A. It might have been Seattle, but and so now the thing is worth like $30 million, and he lost it he thought he threw it away, and so he thought it went out to the dump. You've got like hundreds of people searching through the sanitation, like the landfills, trying to find this guy's flash drive. Because he's got because he's got millions on it.
Yeah, and because over the years, over the last decade or decade and a half, people have lost their wallet keys or even their cold wallets. it is estimated about 2 to 3 million Bitcoin of the total supply of 21 million is just gone. So that's why that's another tailwind for why Bitcoin can be quite explosive, because just from that it cuts down the supply to 18 million. And then you
Right.
have institutions that hoard it as well. So the free floating Bitcoin that's actually traded is very little at this point, and Bitcoin's definitely gaining a lot of traction in terms of even some people are religious about it, which which in a way is interesting, but
Yep.
there are holders for life, so it just reduces the supply, and if more demand comes in, it can cause explosive price action. And quickly talking about MSTR and Solana, I did a comparison last week as a bonus, and if you look at these two charts, I kind of coined the term Solana's the 2.0 of MSTR. You can see the bases are really similar, 6 to 8 month bases, really a swift move up the right side, uh, briefly overshot the left side peak, and then reversed back into the base, but built a flag on top. As you can see, Solana's on top, and then MSTR is on the bottom. Just kind of screenshot that in your own mind right now. And then Don, if you could bring up the next photo with Solana today, you can kind of see the aftermath of it and how it played out. It broke out of that perfect flag, kind of like how MSTR did over 200. And so far, we have retested that upper blue line, which is drawn all the way back to late 2021 all-time highs. We actually did briefly make a new all-time high today. So far reversed, but this is really strong price action. We'll see how this plays out. But this is deemed as one of the major high beta plays to Bitcoin for this cycle, and we'll see if this surpasses Ethereum. It's currently the fourth largest um, cryptocurrency behind Tether, Ethereum, and Bitcoin, which is trading around $2 trillion in market cap. And then finally,
ETF that we've only had ETFs approve, obviously for
Mhm.
Bitcoin and also Ethereum, not for Solana
Yep.
at this point. Is that correct? Okay.
Yeah, that is right. I think there's a GSOL, but I think that trades on the OTC, so of course we're not going to mess with that. And I'm not even sure if it still trades. I just know that was a thing in the past. But yeah, to carry on, finally, I want to talk about one theme in the crypto land if you are interested. So all of these I've talked about, Bitcoin, Solana, Ethereum, XRP, XLM now, are all available on Coinbase. So if Coinbase is listing it, there's good reason for that since they're the most heavily regulated. We'll see what happens after the Trump administration enters office. Their deregulation might enable Coinbase to offer, I guess, quote unquote, higher risk altcoins. But these two I want to talk about real quick. Just present to the viewers two that I'm stocking, XRP and XLM, and they both are in the crypto theme of fast, cheap, and seamless cross-border payments. And their transaction speed is between 3 to 5 seconds, sometimes even faster. Bitcoin could take a lot longer. Previously, I've moved my Bitcoin from wallets to exchange, and sometimes it's taken 20 minutes. So even though people do say Bitcoin is the best way, like best new currency, it does take a lot of time to send it from one wallet to another. And the gas fees, which is the cost it takes to send the crypto, can be quite high too. And it's especially high for Ethereum. And so for these two, it's extremely low cost. It costs a fraction of a cent. So essentially, it's for free. And XRP, the target users for XRP are enterprises and banks. And what both these projects are trying to do is create an enormous liquidity pool that allows quick transactions like across borders, like literally physical borders, like from the US all the way to Europe, all the way to China, in a super quick and cheap fashion. Because we know now the current SWIFT system between banks can be quite costly and slow. It could take days sometimes. And both of these, like you saw the line drawn on the chart, definitely a change in character. Huge volume coming in, 2 big weeks up off the lows, heading into a stage 2 uptrend. And this is really powerful, both up about 200%, so 3x off the lows. And if you're interested in crypto, these are definitely two more interesting ones that I am watching and keeping track of. And I guess my final message is we've talked about a lot of price and volume action, technical analysis, and equities. You can see these principles apply directly to cryptocurrencies. They apply to commodities, even bonds, fixed income, futures. So this is how we run things at Revere, and we believe price is truth.
Yep, the laws of supply and demand, right? One good point about crypto and the incoming administration being more friendly. Gary Gensler, the current SEC chairman, has already announced that he'll be resigning sometime in January. He's been very anti-crypto. He has no problem with people trading options on 3 times leveraged ETFs, but for some reason, has never been a fan of crypto. So they had to drag him. It really literally took lawsuits and courts to force the SEC to allow spot Bitcoin and Ethereum ETFs, and there'll be more to come, no question. All right, great stuff, Ted.
Thanks. Yeah, listen, Ted, by the way, when you're talking about that super fast fractions of penny, Ted, they've already got that technology out there now. It's called Zelle. The only thing is they get limited to $1,000 because if they let you do Zelle as much as you want, the banks lose all their fees, right? Now, the only thing is with Zelle, you got to make sure you get the number right, because if you type in the wrong number, once it's gone, it's gone. But it's very cheap.
Yep.
Anyway, folks, one thing that I want to point out, Ted did that example, and he showed you those 2 charts right there that were almost identical, 2 different stocks in similar industries, a couple months, 6 months apart, that are almost the exact same pattern. And then at the beginning of a segment, he showed those other 2 companies that, look at that, Don's got it up. It's the exact same pattern, right? And what that points out, folks, is it's the behavior of the investors. There's common patterns. It's whether it's innate, whether it's like Fibonacci numbers, it's innate in our DNA, or whether it just feels expensive. I don't know whether it's seeing is believing, and we've just got this thing and it makes it happen. It doesn't matter whether it's the fundamentals driving the price or it's our own innate belief feelings that, oh, that's expensive. They repeat. Like Ted said, he said, history doesn't repeat it, or Connor said, history doesn't always repeat itself, but it rhymes. Those stocks are rhyming. So what we're looking for is, we know what the last stock did. If we can find one that rhymes like that, we can find similar patterns and have an edge. And that's what we're doing every day. Folks, listen, have a great Thanksgiving. Remember, we're not going to do a podcast next week, but will do a daily market insight video every night the market's open. And by the way, to get that, all you got to do is go up to revereasset.com. Up in the right-hand corner, there's a subscribe button. Just put your email and name in there, and you'll get our daily market insight video every night the market's open, and get this podcast on Saturday morning. However, if you're a stock nerd, you're a hardcore stock groupie, just go to YouTube and type in Revere Asset. Just Revere Asset, subscribe. Zach will have this out by 1 o'clock, and you'll have it a couple hours before the market close on Friday. So there's 2 ways to get our content delivered right to your inbox, or right to you. And you can always go to our website. Lastly, you can always call us old school at 855-REAL-WEALTH. Folks, we'll talk to you next week on Your Money. It's not their money, it's your money. Remember that.
Not next week, in 2 weeks, but remember, it's not how much you make in the markets, it's how much you can keep.